Hello traders and investors, this is MarketGoodies.com. Today I'll be discussing HIS, that is Cigna High Income, listed on the New York Stock Exchange, closed last Friday, 1.35%. Can't get that in a CD in one day, and you can't get that in a savings loan account in one day. That's why we like stocks, and that's why we like to trade these stocks. Currently, we are at a 52-week high. I'm pulling up a longer term chart. This goes all the way back to June of last year. Reason why I'm pulling up this chart is I want to show you that this is an inverse head and shoulders pattern, which is actually a bullish pattern. That's one of the reasons why we're going to look at this particular chart right here. You have your resistance level right here, which it broke. We're going to call this the neckline right here. I drew a straight line right across. Then you have your shoulders. You have your first shoulder over here. You have your head right here, and you have your other shoulder here. Now, that's bullish enough, but we're going to look at another chart real quick of the 52-week high. This is what's happened in the past 3 months. What we're looking at in the past 3 months, we're trending above the 20-day moving average, above the 50-day moving average, and above the 200-day moving average. These all can be considered support lines. Currently, we're in blue sky territory, but we do want to look at our support lines, and those three would be our support lines. Now, inverse head and shoulders pattern, of course, is the opposite of a head and shoulders pattern. Head and shoulders pattern being bearish. This happens to be bullish. One of the things that I do like about this, like I said, it is in a blue sky territory, which is about the 225 range. And short term, it does have another support area right at this particular range at 222. Gotta draw a better line than that. Well, that'll work regardless. All right. Now, we also have some parabolic SARs. When they're underneath the candle, like I said in previous videos, that is bullish. That's something we want to see continuation in. And when they're over the candles, of course, that naturally is bearish. So we want to see continuation in that also. We're going to scroll down a little bit and look at our volume. See right here, the volume has been picking up. One of the reasons why it does pick up like this is because people start to recognize those patterns and people start to jump on board. I'm not sure if they had news, but volume is a good indicator. Can't go by that solely. We do have to look at other indicators as well. Try to keep it simple. But as long as we have a continuation in this volume, that will show interest in this particular stock. If we look up here at the RSI, or Relative Strength Index, it has been trending up for quite some time. It's neither overbought nor oversold, but it is getting in that particular range. Want to keep a close eye on that and see if there can't be a continuation in that. Remember, even race cars need to slow down to get gas, so want to keep an eye on that. Want to keep an eye on our support levels. Again, we are MarketGoodies.com. We are not financial advisors. Please do your own research and due diligence. Thank you and have a great day.